Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
University, Martin Feldstein, the original support of Kenneth Rogoff, Benjamin Friedman, and others, and it devolves down to their freshman class, which is legendary worldwide EC10, Economic 10. Recently, Greg Mankiw, the force there, and he gave the baton off to Jason Furman in the recent years. Mr. Furman has public policy perspective, typically from a Democratic view, but I'd call him on the edge of bipartisan, and he joins us now from Harvard. I'm going to redo your essay, Jason. It's a clinic in the New York Times here over the weekend. I'm going to get right down to the single argument here. Mr. Trump has returned to again and again is that other countries are taking advantage of the United States. Is the Trump grievance deserved?
Absolutely not. I mean, that essay I had in the New York Times was just what I teach in my class to my introductory students.
It felt like it. I felt like that, yeah.
And it's the same lesson I got from Marty Feldstein when I took the class decades ago. Trade deficits are not inherently bad. Imports are a wonderful thing. Trade deficits don't happen because of differential tariffs in different countries. And changing tariffs doesn't solve trade deficits. Every step of the reasoning underlying today's announcement is just completely at odds with the most basic economics.
Within this, Professor Furman, is Professor Hassett is trying to help out the Trump administration. Kevin Hassett with a PhD from a Philadelphia school named Pennsylvania. And there's others, Bessent, the Treasury Secretary. From where you sit, Jason Furman, how alone is President Trump?
You know, I don't know exactly what's going on inside the White House, but I know you have Bessent a year ago basically saying tariffs are a bad thing, a loaded gun pointed at the head of the U.S. economy. I know Kevin has historically been a free trader. I hope they're trying to pull things in a less bad direction. But, you know, when your opening gambit is 20% across the board tariffs, you can move in a less bad direction and still have things be pretty bad.
Jason, as I understand it, as I understand the administration's perspective, they simply cite the fact that the U.S. pays a weighted average tariff of 2 to 3 times the rate that we charge most of the rest of the world, and they want that to be leveled up. Is that kind of their argument? And if so, that seems fair, a level playing field. Is that a sound economic argument?
First of all, those other countries are often hurting themselves with their tariffs. You look at these Latin American countries that have had high tariffs. That wasn't a smart strategy to take advantage of the United States. That was a dumb strategy to stunt their economic growth. But let's do some of the numbers. Let's say you do want reciprocation. We have tariffs against most rich countries of around 1 or 2%. Most rich countries have tariffs against us of about 1 or 2%. So we don't need any new tariffs against rich countries. We don't need any new tariffs against Canada and Mexico. Then when it comes to China and India, if we want to even them up, we would need to raise ours by 2 or 3 percentage points. Not anything like the 10, 20 that we're hearing about in today's announcement.
All right, so if that's the math. What are some of the potential unintended consequences here? People will cite 2 that I can think of. One is slower growth. Number 2 is higher inflation. Are those valid?
Absolutely. I think every Wall Street forecaster has downgraded their forecast for growth and upgraded their forecast for inflation. The Fed did the same thing, although the Fed wasn't 100% explicit about what drove their changes. It's hard to imagine there was anything else that was going on there. But to that list of 2, I'd add a longer term one, which is geopolitics. The United States is a big, important country. It is not infinitely big. It is not infinitely important. China is also a really, really big player in the world. The only way we can confront China is by doing it together with allies. And if we alienate our allies, there's a lot more countries that trade more with China than with the United States. We're just going to push that further and help realign global geopolitics away from the US alliance and towards a Chinese entente.
On your morning commute this morning across Canada, across Mexico, and America, Jason Furman with us of Harvard University. We say good morning on Android Auto, Apple CarPlay, the new digital experience. And of course, to all of you on YouTube, subscribe to Bloomberg Podcasts, and I'll get out the Furman New York Times essay here in a bit. Jason, I want to go to the driver of this, and I want to start with Lighthizer, who grew up in the crucible of northeastern Ohio, where as a kid, he saw American steel, industrial might disappear. And then we've got Navarro of LA, of Irvine, with his own take here to move us away from free trade. The heart of this is the math you teach, which is the J curve in economics. There's going to be short-term pain, but out there, I sound like a Linda Ronstadt song, out there somewhere, Jason Furman, there's going to be a better American trade policy. What do they get wrong about the midterm and long-term benefit of what is clearly perceived to be short-term pain?
Right. I mean, the thing that a lot of people don't understand is when you put a tariff on imports, you're effectively putting a tariff on exports too. That could happen because other countries retaliate with their own tariffs. It could happen because your tariffs lead to an exchange rate appreciation, which make it harder for you to export. What do we export in the United States? Well, a lot of that is really terrific manufacturing that's made here in America, sold around the world, and we're going to have less of all of that. I don't see this as a pro-manufacturing plan.
Okay,
we're going to raise the cost of inputs to yeah.
Does Jason Furman have a strong dollar, weak dollar outcome out of this? Let's go Robert Mundell right now. Jason Furman, with or the dollar?
I'm with a strong dollar, but we're going to see what the announcement is today and how it compares to expectations. Also depends a lot on the Fed. I think the Fed is going to be and should be reluctant to cut rates when inflation, if it goes above 3%, sure, they can say their models say it's transitory, but they're going to be pretty nervous, and they should be, to act on that belief, especially with inflation expectations so elevated.
More op-eds. There are people I know, Jason, sending your op-ed to their children saying, just shut up and read it. Jason Furman, thank you so much with Harvard this morning.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Giving us work day after day is Henrietta Treyz on the politics of the moment. Henrietta, the marketing idea here is Liberation Day. Will Republicans be liberated today?
It's amazing. I'm actually about to send an email out with a quote from Senator Hoeven, which is effectively saying, let's hope, we'll see. There is an expectation or an understanding that free trade doesn't work. It's a novel position for the Republican conference. And, we have 150 years worth of data on tariffs to suggest they pretty clearly do not. As Jason Furman points out, that countries with high tariffs shoot themselves in the foot with high tariffs. So that is the course that the president is determined to take, and what we'll hear about later today.
Are you surprised that, Henrietta, we haven't seen any really strategic or coordinated kind of pushback along the lines of Professor Furman from members of Congress, just simply laying out the simple economics here of how tariffs work?
I'm shocked. I feel like it should be so easy to message around. The easiest example is you've had 25% tariffs on aluminum. What is your beer can made out of? Aluminum. It should be a really easy messaging point. All your back to school items, your backpacks, umbrellas, rain boots, baseball gloves, all of it tariffed at 20% already, if not already in the Section 301 tariffs that are on at 25%. So I think the messaging should be much easier. I do think that what President Trump has done, is he's split the Democratic Party that necessarily wasn't pro-free trade a couple of years ago. And he's moved the Republicans into a more progressive place, or populist place, where they maybe are no longer pro-free trade either. And you've kind of bifurcated all of DC, not along party lines, but along sort of allegiances, and then maybe stale or outdated views from either party's left and right camps.
So what is the next, how do you expect the Democrats, if at all, or the Republicans, if at all, to respond to what we're going to hear at 4:00 today? Will tomorrow be a day of lots of sound bites coming out of both parties?
I expect so. And in fact, we'll have a vote that they'll be able to talk about later today. The negative for President Trump on the IEEPA tariffs with regards to Canada is that there is some congressional oversight here. So the senators have put a joint resolution on the floor condemning the president's decision to label Canada, our closest ally, as an international economic emergency that needs to be retaliated against with tariffs. So they're going to put that bill on the floor today. And I understand at least 4 senators, and I know as many as at least 10, want to vote with the Democrats on this. And that would include Rand Paul of Kentucky, Mitch McConnell of Kentucky. We've seen, Bourbon from Kentucky get tariffed, another easy talking point, and a couple of others who are going to side with Democrats to pass this resolution later on. The benefit for President Trump is that the House will not take up this legislation and pass it, or that's his expectation. And so it won't do anything, but it will give Democrats at least an opportunity to get members on the record.
And now, folks, a delicate question. Okay, Senator Grassley's watching this, and Senator Grassley's old enough to remember David Ricardo. He was probably on the boat with Churchill and Roosevelt at the Atlantic Charter. Henrietta Treyz, what we're going to get here is some form of liberation announcement. And in the announcement, or as Paul mentions, 1 day, 2 days later, we're going to get a bailout for American farmers off of Canadian fertilizer and 6 other things you understand that I don't get. Is the check from President Trump to the farmers, Republicans, is it going to somebody 87 miles west of Des Moines helping Senator Grassley, or is it going to corporate America?
It's going to be a combination of both. It's through a very technical program at USDA. The benefit here is that this is a well-trodden road. The USDA secretary under Trump's first term deployed this exact same strategy 3 times to weather the trade war with China. But the real beneficiary here is Brazil, as you were talking about before. They have new rows to hoe on soybeans and all kinds of trade with China. Argentina's in the same boat. And that's what farmers are going to lose permanently on a go-forward basis. So you can bail out the farmers now, but you're losing market share. And eventually that's going to be something that the United States cannot bail farmers out of.
Henrietta, what did you make of yesterday's political action, the 2 races down in Florida and the Supreme Court race? What did you make of that?
I think the biggest tell is, on average, Democrats have been winning special elections by 9 or 10 points, and they exceeded that by almost double in some of those races last night. And the margin of victory for Republicans in Florida's 6th and Florida's 1st district was an equal 15 percentage points. And that's down from a plus 30 and plus 40 position place for Republicans during the November election. So just in 5 or 6 months, they've hemorrhaged support. It's pretty normal for Democrats to be highly engaged in these special elections, but this puts as many as 60 House Republican seats in play for the Democratic Party, according to Leader Jeffries, going into the 2026 midterms.
Just because of radio clarity there and the quality of our microphones, 66 districts?
60. Yeah, and to put this in perspective, when we had President Trump's first term and the 2018 midterms, Democrats were able to pick up 41 seats. And in Obama's first term in the 2010 midterms, Republicans picked up 63. So it's a very appropriate number to have in mind, somewhere between 40 and 60 seats.
She amazes me. She's a machine.
Every time.
It's amazing. Henrietta Treyz, Veda Partners. Thank you. Thank you.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Right now we're going to do, this is like an audible, like we did the Wisconsin and the Florida elections. Yep. Today on a day of trade, we're going to go trade free with Nisha Patel with Parametric. Hugely popular when she comes on municipal bonds. Okay. David Gura and Janet Lauren. Janet will be with us later. Gura, do we have Gura today?
I think we do, maybe.
We maybe do?
We're talking to his people.
We're talking to his people.
Yep.
They were in Princeton yesterday.
Yes.
Harvard, Princeton, Columbia, and 48 other flavor schools are having trouble with the federal government about their budgets. you can't buy a Harvard Muni bond. They're all sold to alumni. What are they doing? When these headlines are there,
yes.
Do college education bonds price down, yield up?
Not necessarily. You have to remember that private schools like Harvard, like Princeton, from a balance sheet perspective, are incredibly strong. So these are some issuers and deals that will go very quickly to some in-state issuers. But from a quality perspective, generally speaking, you don't see any kind of spread widening. Now, the one topic you did bring up, impact of maybe any federal aid reduction to any municipal issuers, I think that starts affecting more states, more local credits, right? So if you think about states, you look at the Medicaid aid that they're receiving on an annual basis, each state is going to have to handle this differently, right? Depending on the severity of the cuts, how that impacts each state. But again, my main point here will be this is no different than any state managing their budgets during any sort of an economic, let's say slowdown. Every state has to reconcile their budgets. Mm-hmm. You come up with costs, you come up with revenue raising measures. But from a credit perspective, this is what we're all trying to parse through.
So, Nisha, I know one of the interesting issues and challenges potentially for the municipal bond market is with the tax legislation and the tax deductibility of interest. Where do we stand there?
Yes. So the administration obviously has a daunting task to come up with roughly, let's say, $4 trillion to counteract to the tax cut extension, which they're looking to do. So the tax exemption of munis has been put on the table. This is something that has come up historically before during President Obama's administration in 2014 during a budget reform. I'm going to simply put it as we put a low risk on this happening to where the tax exemption of municipal bonds is taken away entirely. And in that, for that matter, for a majority of the market, we just don't see that happening. Why? You look at what the actual revenue would come from that. Let's call it $25 billion a year, 250 over the next 10 years. How do all the infrastructure projects get funded in our country, right? 75 to 80% is through the municipal bond market. Every state, every local municipality building schools, fixing bridges, it's all through the muni market. You would be tripling the cost of financing these types of projects if you were to do that at a time when this administration is backing, infrastructure type projects, economic expansion. So this counteracts, I think, just from a high level perspective that. So I do think you could see more noise around this. Especially in a market like munis. We have seen some weakness in munis that has been more supply driven and market dynamics, but I think this is starting to create a little bit more noise, but we put low risk on this.
Is Parametric funded the municipal bonds that allowed for the paving of 59th Street between Park Avenue and Lexington?
It's quite possible.
It was a miracle. The clouds parted.
See? Don't we need more roads to be paved?
Well, no,
we can't increase the costs on that.
I'm in the Bentley, and it's like I need an SUV to get through the potholes. And all of a sudden, the Bentley was smooth today. Tell me about duration. What's the retail trap now? Is it to buy too short munis, or should I be looking at what? Perpetuity or 20 or 30
Well, listen,
year
this
bonds?
is a great question. We've seen a pretty tremendous underperformance in the municipal bond market. You look at your broad Bloomberg Treasury Index, Corporate Index, Q1, anywhere up from 2.5% to 3%. Munis are maybe up about 75 basis points. Why? We've seen a lot of issuance in the market. This has been the second largest quarter in issuance since 2007.
Wow.
Just an incredible amount of money and issuance coming to the market. A lot of this is a function of issuers wanting to get ahead of any volatility that may be coming about later this year, just necessary infrastructure projects. So my short answer to you is the curve is incredibly steeper. Your 2s to 20 year in the muni curve is about 130 basis points.
Wow.
You are getting paid to extend out in terms of duration. Right now, most municipal bond investors, retail investors are a little scared to add duration. This is when you want to be looking at that part of the curve. So look at, 10 plus years, particularly 15 to 20 years, you're locking in tax equivalent yields of anywhere from 7 to 8%. Think about that, right? For a high quality asset class.
I'm all over that. I'm the largest creditor.
So this, I think, we're seeing as a pretty tremendous buying opportunity.
Are funds flowing like that? Are funds coming into the municipal bond market?
That's a great question. So supply has been very high. On the demand side, we have been seeing outflows out of the municipal bond market, and even ETFs we're seeing outflows. Now this week, we're starting to see that turn. But we know in this market, when things turn and come back in the other direction, they can come in a flood. This is when you want to, at least leg in and start locking in these yields before you could see yields compress.
We get a huge
downwards.
response when you're on. And let me go back to a question I've asked you before, but I think it needs to be revisited. Can our listeners and viewers on YouTube, can they acquire individual bonds, or are they locked out by Fidelity, BlackRock, PIMCO, and the rest?
It depends on how you're accessing these bonds. There are brokerage, platforms that allow you to do this. We would advocate, professional management is probably the better route to go, right? For all the reasons that we talked about, better positioning, credit management. So Tom, I'm still waiting for you to open up your account with us. But
I'm looking at the tuition geo. It's out there somewhere.
Yes.
Help me with how many beeps you pick up by dealing with adults like you versus sitting on the phone trying to get, I'll take 50 or I'll take 10 of the Mateo education geo of, whatever.
Right off the bat, there could be, 2 to 3% savings on just the execution.
200 beeps?
On that individual hold, not 200 beeps, so 2% of price. So let's say on a 10-year bond, roughly 20, 30 basis points at least. But that's just on the execution, right? Because we're buying as professional institutional buyers, we're accessing new issue deals, which as an individual on the other side, you simply would not have access to. You can only buy it in the secondary market.
Exactly.
So there's a markup associated with that. Credit management, what is that worth? In this environment, I would say that is worth a considerable amount.
What's a beep pickup on new issues? We got to go here, but what's a basis point pickup on buying a new issue versus something out there?
So right now, in the 10 to 15-year part of the curve, you could easily pick up anywhere from 20 to 40 basis points, depending on, just because right now you're seeing a lot of issuance. Things are getting a little sloppy, as I like to call it.
Are you taking notes?
This is when you want a professional manager to be accessing the new issue market. So parametric is a way to do it, Tom.
I have a laddered municipal portfolio is what I have by duration. Have for 30 years. That's how you play it.
Yeah.
Clip and coupon.
There
baby.
you go.
High state of New Jersey, triple tax.
Do you know what I have? I have a laddered tuition portfolio.
All right, we need to talk about that after this.
Oh, we do. Okay. Oh, this is great. We get a huge response when Nisha
Thank you
Patel's
for having
on.
me.
She is with Parametric. We don't take enough advantage of a discussion of municipal bonds.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Peter Scheer goes to the heart of the matter on this event at 4 p.m. this afternoon with the President of the United States, and he takes it right back to the Code of Hammurabi, and of course onto Hebrew law as well in the Exodus, and that is this concept of grievance and retribution, an eye for an eye. Peter Scheer with us, brilliant note from Academy Securities. How eye for an eye is America this morning?
It feels very much so, and I think that's part of the problem, right? It's where did this first eye start, right? It's, we're now complaining about tariffs that were put on us, but I think it's a wrong attitude, and I think we're pushing people away. And although we're really focused today on tariffs, I think we have to take one step back and say everything else that's going on geopolitically is also pushing our friends and allies away from us. How we're handling NATO, how we're handling Russia and Ukraine, the language in and around Greenland, the language in and around Canada. I think there's this real concern that's going away, and you're starting to see it occur geopolitically, where all of a sudden Japan, China, and South Korea are talking, Canada and Mexico are talking directly. I think we've overstated, quote unquote, our hands or what our cards we hold. And I think no matter what happens today, 2-3 weeks later, our stock markets are going to be lower as we realize that we are kind of destroying the American brand.
Are you surprised that there hasn't been any more pushback against this president and this administration from Congress, broadly defined, as to some of these bigger issues?
I think it's so early in his administration. He won with a pretty clear mandate, so I think everyone was going to let it play out. And I think this time around, the one thing he did clearly from his perspective is he filled up his posts much quicker than last time.
Yep.
But he picked people who are really on board with him, particularly on tariffs. Almost every single person in his cabinet believes tariffs work. And so I'm not surprised we're not seeing pushback. Maybe some of the voting last night, maybe that'll be the first wave that people should raise their hands and say, hey, maybe we need to change this a little bit.
The advantage you have, and folks, Academy of Securities has a huge military tenor of excellence of admirals and generals on their board as well. The heart of the matter is he's tearing asunder the Atlantic Charter off of Newfoundland, 1941. I mean, and George Bush Sr., who was hauled out of the Pacific Ocean, in a downed airplane onto a submarine at Midway, we're going on beyond that. Did your people at Academy of Security say we're staggering into a new era, or is this a moment then where we pull back?
I think everyone's torn, and like everyone else, I'm sure there's varying degrees. But I would say, one thing that comes up in conversations, right? All of a sudden, let's talk about Greenland, the polar ice cap. Well, Canada has, I believe it's 20 some odd icebreakers. Russia has 40 something. The US has about 5. So if we are that worried, why don't we have icebreakers? Why aren't we more prepared for this? Greenland seems like a weird way to do it. I think there's a lot of questions about the messaging. We used to have 3, bases in Greenland. Why not just talk to Greenland and try and reestablish 2 if we think it's that important? So I think it's the messaging and how we're going about it, maybe necessarily than the what, that is causing a lot of consternation.
Paul, jump in here, because I'm just going to talk submarines in the day just straight.
Exactly.
People nationwide are going to turn off the show. Save me, Paul.
Peter, so given all that level of uncertainty, just whether it's economic uncertainty, political uncertainty, military uncertainty that seems to have been engendered over the past several months, what do you tell your clients about investing these days?
Well, one, I actually think there's a high degree of certainty. And the certainty is not good, right? The certainty is, one, other countries are now playing us very differently. If you go back to Xi made a trip to Mar-a-Lago very early in Trump 1.0. Every time Trump mentioned tariffs, China had some sort of trade delegation. This time, China's sitting there and saying, oh, yes, sir, may I have another? Yes, sir, may I have another? They're moving along. I think we have bitten off way more than we can chew. So again, at $30 trillion GDP, we're the largest economy. Why we've chosen to fight with the 80 trillion rest of the world is a little bit unclear. And one thing that I think about a lot, I think this is really representative of what's going to happen going down the road, is 3 months ago, if you told me Germany was going to spend hundreds of $billions on military equipment, U.S. defense stocks would have skyrocketed.
Yep.
They are not, because Germany doesn't want to buy American equipment. And I think this ending of the American brand is my biggest concern.
Okay.
And bring it over to the markets. Let's bring it over to the world of Peter Scheer from this geopolitical moment. Again, coverage this afternoon, really coverage all day, folks, and into tomorrow. Douglas Irwin in Dartmouth with us tomorrow, who owns the high ground on this debate. Bring it over to the markets then.
So,
is there a sheer opportunity here?
I think you maybe sit through, it feels like the market wants to rally no matter almost what is said. Then I think you want to fade this. I think we're going to be down another 10, 20% in the S&P 500 in the coming weeks and months as the reality of what we've done, right?
So you're talking negative 35% drawdown.
Yeah, negative 25 to 35%. I think this is going to be a severe problem. I keep thinking back to Japan, 1989, 1990. Was anyone sitting there at the Nikkei wondering, oh, yeah, we're going to be down 60% in a year and not recover for 30 years? No. And I feel like some of what's going on puts us in that sort of position. The world is moving away from us. We don't have the cards that we think we have. And on top of that, the supply chains aren't ready. Even if we are successful, and I don't think we're going to be successful in getting companies, it's a 2 to 7 year project to build manufacturing facilities here, to get the robots in place. I think we've misplayed very badly here.
So we've seen a movement just in the stock market, rest of world dramatically outperforming the U.S. S&P 500 year to date in the first quarter. Is that a short-term trade? Is that something more? Are you telling clients, yeah, think about Europe, think about Japan?
I continue to like China probably better than the other places. Okay. I think China's going to be the big beneficiary. I think right now every market will come down a little bit. But the one thing, again, I think we really missed how many intangibles the U.S. benefited from its position as this kind of benevolent superpower. One, we really benefit from capital flows. Capital flooded into the U.S. Everyone wanted to be in the U.S. from an investment standpoint. That is now turning. People don't want plant and equipment here necessarily. They're trying to figure this out. So right. I think capital outflows continue.
I got to bring this up. Is this like, can't we do a 8-hour show today? Rich, can you find out, talk to management and see if we can extend this out? Peter, this is fascinating. And to me, the heart of the matter is I'm going to assume Academy of Securities has somewhere there's a token Democrat in the staff. But this is the president's Republican Party versus George Bush Sr.'s Republican Party. You're talking like there's a permanence to Trump trade policy.
I think if you're in a relationship and you say that one thing that you should not have said because you can't go back to doing it.
Lisa, listen in, please.
And I'm not very good at relationships, but it does strike me that we've gone past that moment where we've done enough that people don't trust us, that we're trying to retrade everything. Again, USMCA, oh, wow, maybe we should exempt autos. And you've seen mistake after mistake made, right? Why are we now having to bail out farmers for their input costs? Well, their input costs are largely fertilizer, potash, things coming from Canada that we just slapped tariffs on. So tariffs are supposed to be a revenue generator, but now we're having to spend the money. I think this has been done very poorly, very haphazardly. I think if Bessent was truly in charge, this would have been played out over 6 months. It would have been organized. It would have been timely. I think it's been very random, and I think we have actually broken relationships that I don't think are repaired easily.
You got a gold call? Lisa wants to know, you talking gold 4,000?
No, no gold call. I do think crypto's actually going to fall down a little bit. I think crypto's going to bear the brunt of a lot of this. I think people are going to be disappointed by a lot.
10 a.m.?
And that's the other reason to me, crypto has become much more part of the U.S. stock market, whether it's MSTR being in the NASDAQ 100, the Bitcoin ETFs, it's in people's equity portfolios. I think this whole thing kind of comes down together. And to me, I want to see crypto come down significantly from here, maybe to 50, 60,000. And I want to see the NASDAQ come down. I also keep looking at TQQQ, which is a weird triple leveraged ETF, but it represents about $60 billion, keeps getting inflows. I need to see capitulation on that to be bullish.
Yeah, Peter Scheer, come back when you get more negative. Peter Scheer, Academy Securities.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Let's get right to it right now. It is newspaper day with Lisa Mateo, and she had like 12. Are you torpedo bat free this morning?
Yes, I am.
Right.
But we are swinging some home runs. Okay,
Here
we go. All right, we have a lot of stories about the price of so many things going higher, right? We've been talking about. Now we add to this. This is this interesting story about medical care affordability. This was a study from West Health and Gallup. It found that 11% of Americans said they could not pay for medical treatments within the past 3 months. So this is of lately. Things paying like a doctor's visit, prescription drugs, things like that. More than a third said that if they were to need medical care, they wouldn't be able to afford it. And it's also an interesting thing because it showed that this widening disparity among Black and Hispanic adults, also those making the least amount of money, to the reason why they're saying is higher premiums, things like the added cost of going to the doctor, recent rollbacks and Medicaid coverage on top of it. So with this really interesting look at here's yet another thing that people are having trouble affording.
It's kind of important too.
Yeah, most definitely. No, definitely. Medical care, definitely. And I want to stick with medical. Go to weight loss drugs. We talk a lot about it, right? The
Let's
FDA.
do that.
Yeah, the FDA, because Tom loves it. Here's the overall factor. The FDA is about to take away telehealth companies' license to sell these knockoff weight loss drugs, right? They gave them the green light when the drugs were in short supply. So now it's time. The supply is back, so they have to take away this license. So now things are changing. It's causing this workplace battle, like who's going to pay for the GLP-1s like Ozempic now that they're a little bit more expensive?
They're expensive, right?
Yes.
It's like, am I right? $900 something?
So, because you can get them before from like these knockoffs for about $200, and now you have to pay like $500. So there's a big difference in price. So who's going to pay for it? Will the company pay for the employees' weight loss drugs, or will they not? I mean, some stopped it and they said, we're not doing it. Others said, you know what, we're going to keep this because it's going to help us train and attract talent and attract talent too. So
I wonder do we know what percentage of people are using these things these days? It seems like a lot.
It definitely does seem like a lot. And a lot of people are staying on it. I don't like people who've gone on it. I've known some people who've gone off of it and kind of maintain, but then they have to kind of jump back on again when they start to fall back. But it's this idea of who is going to pay for it. Will the company kind of pony over the money for it in insurance? And the last thing, we've been talking about President Trump's tariff announcement, right? Later today. Here's an interesting take. The Wall Street Journal is saying that Brazil could be this big winner in the trade war. So they're saying they have these certain advantages. For example, Brazilian suppliers, everything from cotton to chicken, they're looking to higher demand from China. So that's the main point. So they're saying that trade relationship has expanded. Chinese buyers stockpiling Brazilian soybeans.
Right.
So at the same time, Brazil has opportunities to boost exports to the U.S. and other countries because it's the biggest producer, for example, of footwear outside of Asia. So they're hoping that they can send more shoes to the U.S. In place of Chinese products. So they're putting Brazil in the spotlight.
What you're talking about is the complexity of these discussions with Jason Furman in 5 minutes versus the simplicity, the theory of simplicity that we're getting tick by tick here.
Yep.
Yeah.
Really from every country.
It's going to be the devil's in the details. We'll see how this plays out.
Will there be details today, though?
I don't know.
I don't know. I have no idea. Lisa, do you have an angle here? Have you talked to the White House in the last 2 hours?
Not yet. It's on my agenda.
Lisa Mateo, the newspapers this morning. Thank you so much.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.